So, friends, we will be discussing today about current ratio. What is current ratio? Who are the parties who look about the current ratio to understand how the current ratio works for a company? So, current ratio is a ratio which tells the ability of the company to meet its short term obligations which are due within a period of 1 year. So, how is current ratio calculated? It is simply calculated by dividing the current assets of the company by the current liabilities. These assets and liabilities figures are available on the balance sheet of the company. So, what a current asset is? Current asset is an asset which are basically those assets which are likely to liquidate or turn into revenue for the company during the normal course of operations. Examples of current assets could be stock, cash, cash equivalents, your trade receivables. Similarly, current liabilities are those liabilities which are due for repayment within a period of 1 year. That is a normal period for a company to ascertain the current liability position. So, current liabilities could be your short term loans that you have taken for the company. It could be your trade payables, your prepaid expenses, income tax and all that. So, an ideal current asset ratio would be in the range of 1.2 and 2, and it means that if a company has a ratio, current asset ratio, current ratio in this range, it is a healthy position of the company, and a company would be able to meet its obligation in a proper way. And similarly, a current ratio of less than 1 is considered to be unhealthy. So, if for example, let us take an example, if a company has a current asset of say 200 and current liability of say 100, then it means it has a current asset ratio or current ratio of 2, and it will be able to meet its obligation twice with the amount of funds it has in case of liquidation or in case of repayment of obligations within a period of 1 year. So, who aims at this ratio are those potential investors or the analyst who try to analyze the company or its ability to meet its repayment obligation in case of any event, and all those liabilities which would be paid within a period which are due for repayment within a period of 1 year. So, friends, this is basically a rough idea or a rough sketch that we could understand or we could make out from the current asset or current liabilities or the current asset or the current ratio of the company, and that is it. I hope it would be helpful for you to understand the financial position before you invest or you make any investment in any of the company. Thank you.